I'd like to begin today by acknowledging the traditional custodians of land we are meeting on today. In my case, this is the Gadigal people of the Eora Nation. I'd like to acknowledge their continuing connection to land, air, water, and community. I'd also like to pay my respects to elders past, present, and emerging, and acknowledge any First Nations people present here today, as well as all of those non-First Nations allies that are joining us. Aboriginal and Torres Strait Islander people should be aware that this presentation may include references to or images and names of people now deceased. Additionally, the information presented in this webinar is not legal, financial, or tax-related advice, nor does it constitute a comprehensive or complete statement of the matters discussed. You should consider seeking independent legal, financial, taxation, or other advice to check how the information presented relates to your unique circumstance. Thank you for joining me. My name's Remy Crick. I'm a proud Warramai woman and business development manager at Ochre Ventures as part of the Indigenous Capital Limited Group. We've created an Indigenous-focused fund committed to backing businesses with high Indigenous impact to assist entrepreneurs and founders grow sustainable businesses, create wealth creation, and self-determination. From our research, we've seen that there is a real need for this type of solution, and we are here to provide the additional form of financial support that many players in the space have been calling out for. But what is venture capital anyway? We've joined James Alexander, co-founder and partner at Galileo Ventures and member of the Ochre Ventures advisory group, to tell us a little bit more about this type of finance. So it's great connecting with you, James. If you wouldn't mind giving us a brief introduction as to who you are.
Sure. So my name's James Alexander. I am the co-founder and partner of a venture capital firm called Galileo Ventures. And we invest in technology businesses, but we have a bit of a spin. We invest in very new businesses founded by first-time entrepreneurs.
And would you be able to tell us a little bit more about what exactly venture capital is?
Yeah, sure. So venture capital is a relatively new form of financing. It has its roots in modern times, back to, I guess, the what we call Silicon Valley, sort of California, San Francisco area, where a lot of the hottest startups have come from. A lot of the products that we use today and take for granted, things like WhatsApp, Facebook, all started within a 2-kilometer radius of San Francisco. And that's really all part of this technology boom that we've been having over the last 30 to 40 years. And, you know, the things like the iPhone, laptops, tablet computers, and mobile phones, and a lot of that software, a lot of that hardware, all those products, a lot of that was designed in that area. And so the investors in this type of technology is what's called venture capital. And it's all about giving money, capital, to new ventures. So there are essentially 2 forms of business financing you can go after. One is debt financing, and that's pretty normal. You can go to a bank and get a business loan. You can go to the bank, get a personal loan, you know, get a credit card. And that's just that is debt financing. You know, you pay interest on whatever you borrow. And then there's equity financing, and that's that's selling shares in your company to investors. And that's what you do with venture capital. And so an easy way to think about it is if you want to get a loan for your existing business, you can go to a bank and get a loan. You don't have to give up any shares. All you do is pay off the loan over time. With venture capital, you can go to me and you can go, hey, James, I want, you know, $500,000, which is a lot of money for small businesses. And rather than pay interest on that or anything like that, all you do is we're buying shares in your business for $500,000. And that's equity financing because you're giving up equity. And so that's the basic principles of venture capital. Now, that's awesome because what that means is that money is used to fuel growth in your business, and there's no loan, there's no repayments in the loan sense, but you now sell a bit of your company to someone. And so I think what that means is, there's different types of entrepreneurs that are attracted to both these types of financings, and that will suit different types of entrepreneurs and suit different types of businesses. The thing that makes venture capital a bit different to other forms of financing is that it's all about funding very big ideas, building new products, and all about doing it very early on when a lot of things aren't proven. And that's what makes venture capital very different to every other type of financing that there is available. Everything else is a lot more conservative. So you need lots of metrics. You need lots of, sound business principles. They'll look at a lot of different aspects of your business before they give you money. But with venture capital, it's about giving money to new technologies, new ideas, people building new products that can have a big outcome. In Australia specifically, there was virtually no venture capital industry up until the last 10 or 15 years. Before that point, there was literally only 1 or 2 funds in existence in Australia, and the amount of funding available was extremely limited. So it was virtually non-existent. Today, however, there's over 70 funds in Australia that specialize in venture capital. They all have different, interests and areas of focus. And so there's never been a better time to do a startup in Australia.
What kind of businesses should apply for venture capital funding, but then also conversely, what kind of businesses shouldn't apply for venture capital, or venture capital isn't really suited to those type of businesses?
A lot of venture capital or growth businesses that VCs are interested in are products that scale. And so if you think about, we'll take the easy example of Facebook, the maximum number of users of Facebook is, in theory, limitless. There can be billions and billions of people on Facebook at once. And the reason for that is because it scales, because it's based on software and it's delivered on the internet.
So I was wondering, are there any key terms that business owners should get acquainted with or understand the meaning of?
In terms of some of the key terms that relate to this, so when you're going after or talking to venture capital, I'll sort of just give you 4. There's quite a few. There's a whole language when it comes to raising money, raising equity, and selling shares, and talking to VCs. But the ones that I think I'll mention here is often we talk about round size, and so that's how much money are you trying to raise in your financing round. And typically, like the types of things that we invest in, because we're usually the first investor, are anywhere from $200,000 up to $2 million typically is the range. And so what you as an entrepreneur need to know is, how much money do I actually need? What am I going to spend that on? And then once I've spent that money, where will my business be? And those are 3 important questions to be able to answer when you think about how much money you need to raise. And I think a lot of entrepreneurs I meet don't think deeply enough about that. Then there's valuation of the business. So if you're selling shares in your business to private investors, then you have to value those shares at some sort of number. There's got to be a share price. Then there's pitch deck. What that means is a presentation about your business. A lot of small business entrepreneurs have never heard of a pitch deck before, and that's probably because they're used to creating business plans. As a VC, as an investor, typically we don't want to read business plans. We want to see pitch decks. Pitch decks are just summary presentations of your business, and that's really the language that we use. So it's very important to have a good pitch deck. And then market size is the other question, that term that will often get thrown around. And what that means is, how big is the market that you're selling into? And so essentially that means how many customers are there that you can service.
So now that we've learned what mainstream venture capital looks like, let's dive into what Ochre Ventures does. We want Indigenous businesses to be successful, to grow, and to scale. We understand that no 2 businesses are the same. For that reason, we will be providing economic impact investing in a variety of forms, so that we may cater to the diverse and unique needs of the businesses we wish to cater to. We're really looking to cater to a wide variety of ownership structures and best accommodate for their needs. We're really interested in these businesses that have high Indigenous impact, especially in the areas of employment, procurement, and mentorship. Pearlii is a really positive example of venture being applied in the Indigenous context. We're going to hear from Kyle a little later on, but let me first explain how it's been successful in his case. So in terms of meeting the criteria for Ochre Ventures, not only is Kyle a business with substantial Indigenous ownership, but he's also a founder that's committed to giving back to community through mentorship and advocacy for First Nations business. Kyle's business is all about providing world-first AI technology to provide free, fast dental checkups and have free oral health education. Indigenous Capital Limited enabled Dr. Kyle Turner to launch Pearlii by providing seed capital, support and mentorship for him as an Indigenous entrepreneur. And based off this seed support, Pearlii has now been able to raise their next round of funding from an institutional investor. We caught up with Kyle earlier to learn how venture capital has been used by Pearlii in order to grow the business. Kyle, I'd love to know a little bit more about Pearlii. Can you give us a bit of an insight as to what you're doing at your company?
Free dental checkups using AI. I had the idea about 4 years ago. Company formed about 3 years ago. We've got about 35,000 downloads for our app now.
Amazing.
So that's a lot of free dental checkups, and then at the end of your results, we get you onto a little program to improve your oral health behaviours. So I created Pearlii because dental in this country is heavily privatised and it's out of reach for a lot of people, particularly living in rural and remote communities. I'm originally from Dubbo, Wiradjuri country, and we had no access to dental growing up. And I've got really shit teeth, so as you can see here. And it really annoys me because it's fully preventable with regular checkups and good oral health behaviours. So I set about to help solve that problem which I had growing up.
Venture capital is a concept that is quite new to some. So I would love to find out, or I would like to know, how did you first find out about venture capital?
This is my second startup. I did one in the UK and raised 100 grand of angel investment money, which is from generally a high net worth who likes you as an individual, likes what you're trying to do, understands the risk. So it's just usually a check that's smaller than venture capital, maybe up to 250K, like from as little as 1,000K. And that's usually where you start. And that's what I did on my first startup. I never got to venture capital because it was a complete failure. It was a healthy food delivery startup. Pearlii started with angel investment. We had 200 grand pre-seed capital back in 2019, and then we launched our app in 2020, and it just went gangbusters. It won a couple of little awards, and then that got some attention from venture capitalists. They started reaching out, and then I got to learn about the world of venture capital. It was a steep learning curve, and and then we've raised now over 2 million venture capital.
Congratulations.
So it's just, the investment's one thing that doesn't amount to success. The success is building a profitable, impactful business, and we're still really early in our growth, so we've got a long way to go.
Why did you choose venture capital as a source of finance as opposed to a traditional bank loan?
Another thing I've learned recently is debt is not necessarily bad. There are pros and cons to venture capital, angel investment, or debt, and there are also grants if you're a not-for-profit, or there are R&D grants, which we won a couple of times. So there are lots of different ways to get a capital injection, and we've done grants, angel, and venture capital. We haven't done debt, but you should really consider debt if you've got predictable month-to-month revenue. So you've got quite a bit of historical data, and you've got a clear trend, and you can go, all right, if I take on some debt to help me grow, I know I'm going to be able to repay it pretty reliably. And that way you don't lose a chunk of your business, which you sell to venture capitalist investors in return for that cash. So you get to keep all your business and you get to grow. So debt isn't necessarily that bad. But we were still early stage. We didn't have that history, and we wanted to grow really fast to capture the market. So that's why we needed a large capital injection. That's what we chose to do.
And if you were to start another business, would you go down the venture capital route again?
For Pearlii, yes, definitely. the tech development was pretty heavy. We needed to build a lot of tech. We needed to build a large dental image database. Paying dentists was very expensive and time consuming. So if Pearlii was ever going to work, I needed a lot of capital to get it off the ground. And then next year, we're looking to raise another round so we can create the next generation of our tech, which requires clinical trials, which is quite a long runway, which you need a big investment at the start.
Welcome to Country is another really great example of how venture capital can be applied to businesses that have high Indigenous impact. Welcome to Country was established before the fund was in place, but if someone had brought this to us, this is something that we definitely would have invested in. Not only is it increasing employment, but it's also increasing procurement opportunities. Welcome to Country is a customer acquisition platform, allowing Indigenous businesses to grow and access new markets, including corporates across Australia. Aboriginal and Torres Strait Islander goods, tours, experiences, and immersions are available for purchase via the dedicated e-commerce marketplace. Ochre Ventures was founded by Indigenous Capital Limited. It's a not-for-profit PBI that's been providing financial support to a range of businesses that have high Indigenous impact for a very long time. We support over 200 businesses directly and indirectly, and with the creation of the fund, we will be supporting a lot more. In order to provide the best support that we can, we've partnered with some of Australia's top organisations. Historically, foundations have perpetuated the grant mindset. We're trying to get foundations to think about investing in businesses with high Indigenous impact. Indigenous Capital Limited invests its corpus into initiatives that meet its mission statement, with all returns from investments being recycled back into the fund. Thank you so much for joining me, and if you'd like to learn any more about Ochre Ventures or what we do, make sure to visit our website, ochreventures.com.